morning. I'd like to welcome everyone participating in today's webinar, Using Form 990 to Tell Your Story. My name is Mac Lillard, and I'm an Audit and Risk Advisory Services Supervisor at Gelman, Rosenberg & Friedman, and I'll be today's moderator. I'd like to start off today with some quick housekeeping items and explain what you'll need to do in order to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation survey that will appear automatically immediately following the webinar. You'll be asked to recall these words in order to receive credit. Please write down the CPE words when they are given and keep them until you receive your certificate, as they will not be provided again. If you have any technical questions or issues during the webinar, please use the questions function to speak with our webinar administrator for assistance. The slide deck and recording from today's webinar will be available for download at the link shown here. You will also receive a follow-up email with the direct links. Technical support and CPE questions may be addressed to the email shown here on the screen. Today's learning objective is to understand how the Form 990 can be used as a valuable development tool, and one CPE credit is available for this webinar. If your organization thinks of the Form 990 as only a tax return that your organization is required to file with the IRS, then you're missing a huge opportunity to showcase the great work your organization does. The Form 990 should be used as another piece of marketing propaganda to promote your organization to donors, foundations, prospective donors, and the world at large. Remembering that the Form 990 is a document that is publicly available to anyone via guidestar.com is essential to the backbone of how to begin to convey your organization's story. Collaborative efforts with multiple departments within your organization is the most effective way to allow the Form 990 to do just that. During this session, we'll be discussing strategies for using your Form 990 to expand transparency, communicate more effectively, understand the risks within the form itself, and increase your organization's credibility and visibility. Even if your Form 990 is prepared by an outside practitioner, you should take control of the sections that allow you to tell your organization's story. Remember, the IRS is not the only one looking at your Form 990. Topics that will be addressed include who is looking at your Form 990, key components of the Form 990 you can use to promote your organization, how to craft the messages you want to convey through the Form 990, and tips for reporting sensitive issues on your Form 990. I'd like to take a moment now to introduce your presenters for today's webinar. Tricia Catavini is a nonprofit senior manager at GRF and has more than 12 years specializing in serving the nonprofit sector. As a senior manager, she has the technical knowledge and specialization in the industry, working with a range of nonprofit clients, including public charities, foundations, and associations. Tricia is an auditor by trade, but has developed a passion for the nonprofit sector that is becoming an industry professional. Janet Godarzi is a nonprofit tax manager at GRF. As a nonprofit tax manager, she reviews and supervises the preparation of all tax compliance-related deliverables for nonprofit clients. I'll now turn the presentation over to Janet.
So, good morning, everyone. Before we get into the details of the webinar topic today, we wanted to provide this industry alert. And I think we sent this alert a few weeks ago via email, but on July 1st, 2019, President Trump signed the Taxpayer First Act into law. So this was proposed to modernize and improve the Internal Revenue Service, and the new law requires all tax-exempt organizations with a filing requirement to do so electronically. Previously, only larger tax-exempt organizations, those with over $10 million in assets and filing over 250 returns, were required to e-file their Form 990. Starting in 2021, almost all tax-exempt organizations will be required to e-file. The new law will affect organizations with a calendar year beginning January 1, 2020, those returns being due May 15, 2021, and fiscal year filers with a tax year beginning after July 2, 2019. And now I'm going to turn it over to Tricia to start off our seminar.
Good morning, everyone. As Mac had previously mentioned, the Form 990 is really a tool that you can utilize to showcase your organization, the good works that you do, and really what your service and mission accomplishments were during the year. As everyone is aware, a part of the Form 990 asks the question if the organization has provided the board a full copy of the Form 990 prior to its filing. When it comes to the board review, I'm sure many of you could agree that being a board member, those of you that have stepped onto a board or even working with your board, most likely reviewing the Form 990 wasn't really a motivator for joining the board. As a part of my experience in my practice so far, I have given a breadth of presentations to boards, mostly related to the financial statements. The boards that I work with are really concerned with the audited financial statements and that clean opinion. But a lot of times when the Form 990 comes up, I like to liken the grimaces and the faces that I sometimes get to a trip to the dentist. So making sure that we really highlight the Form 990 and how useful of a tool it is, what a great form it can be to showcase it, as well as also educating our board in how to utilize it as such a tool. So when a person volunteers on a board, obviously they may be community leaders, they may be people who are just passionate about the mission of the organization overall and maybe don't have a finance background. So really, again, I mentioned the education piece. We want to make sure that the board is educated in a way that at least they can look at a Form 990 and intelligently interpret it based on what they have known about the organization and what they have done during the year. So the tax presentation, if you do have a presentation to your board, isn't really meant to be solely technical on the financial metrics of that Form 990. Really, it just needs to be focused in on the audience, which, again, as I mentioned, are mostly made up of volunteers, those who are attracted to your organization's mission. So let's talk about those service accomplishments, which we'll get into a little bit more later. So if you were sitting in the chair across from one of us as we gave a presentation, if you are management, those of you who are actually board members, think through what would you want to know and what would you want to hear? What should we be thinking about from future perspective? What should we be worried about? A lot of this information can actually be gleaned from the Form 990 itself. So as we talk through the Form 990, we tried to bring a creative twist to this in a manner that maybe would help you understand the Form 990 and its core components and break it down a little bit in a way that would be helpful to remember it. So the Form 990, we're going to liken to a movie. You've got your introduction, you've got the body, which gives a lot of detail, you've got your conclusion, and then you're going to have your appendix, which gives you more detail and credit. So when I look at the Form 990, let's do a cross comparison with a corporate tax return, the Form 1120. The Form 1120 is filed by taxable corporations, as I'm sure you all know, but when we look at the length, let's just talk about the length. The Form 1120 currently only sits at 5 pages long, when in contrast, the Form 990 is now 12 pages long. Back in 2008, I believe it was when we really went and got into a little bit more detailed information with the Form 990, because again, the IRS, prospective donors, the charity watchdogs, we're really more interested in a little bit more information from the Form 990, what they're doing, how their policies and how the organization is overall governed and what the oversight is. So the Form 1120 starts with the income, has the expenses all on page 1. Page 2 kind of goes in some of those special deductions. Page 3 is the tax owed. Page 4 has some questions that are related to the corporation itself. And then you have the balance sheet on page 5. Form 990, however, starts with a brief snapshot of the organization and then really dives into the missions and accomplishments of the organization, what the policies are, certain things that may have occurred during the year. So all of that information is informational to the IRS. Financial information comes at the end. So from my perspective, and I believe from Janet's perspective, what we're gleaning from that is that the IRS, since this is obviously a form filed with them for compliance, is more interested in what you and your organization is doing compared to how much money they're making, and maybe also necessarily with the transactional side of things versus with the audited financial statements. Obviously, those are more transactional piece.
And with that, we've come to our first polling question. So the first question is, does your finance and/or audit committee or board of directors formally review the Form 990 prior to filing? The answers are A, yes, or B, no. Please take a moment now to answer. While participants are submitting their answers, I'll provide the first CPE word. The first CPE word is story. If you want to receive CPE credit, please jot this word down because you will need it to fill out the survey following the webinar. Again, the first CPE word is story. S-T-O-R-Y.
So it looks like we have a majority of organizations who are sitting on this webinar with us, that there is a formal review process with the board, which is fabulous. I know that in some organizations that I work with, all they simply do is send off a copy of the Form 990 literally minutes before we get the e-file authorization back, which really doesn't give the board a chance to formally review it and ask the questions that are necessary. So I'm very pleased to see that most of you do that. So again, we talked about likening this to a movie. We're going to use one of the most current movies that I think is available, and hopefully one that you all would recognize, The Greatest Showman. So when I think about that movie, it's a wonderful opening act. It starts right off into a great musical piece, has some great choreography surrounding it, and you really get pulled in. It's like the teaser, right? So that we can kind of glean maybe what the story might be behind that movie as we get into more of the detail. So much like the introduction to that movie, we really can utilize page 1 of the Form 990 like that preview. So page 1 of Form 990 really gives just a brief snapshot about the organization and maybe some of the things that occurred during the year. It talks about things such as the exempt status, whether you're a C3, a C6, or et cetera. It gives a very concise, brief description of its mission. It also gives some information surrounding how many board members there were during the year, how many employees did they have that were W-2 compensated, how many volunteers did the organization utilize throughout the year. And then if you do have unrelated business income, it also gives a little snapshot over what that gross and net unrelated business income was. And then, of course, a brief snapshot of the information, the financial information, with prior year, current year summarized, revenue, expenses, total net assets. So again, as I mentioned, this is really just meant to kind of intrigue the user for the Form 990. So if this was the only page that your organization put out there, does it convey a good message? That's one question that I think as management and also as board members that we all should ask about this Form 990 itself. What type of organization? Where were you incorporated? When were you incorporated? Is the number of volunteers reasonable from an estimate standpoint? And do financial trends appear favorable? If they do, why? If they don't, why not? These are all some of those core questions that we can start questioning and answering from the Form 990 page 1.
Okay. Then we get into the body, the mission and accomplishments. And here we have a picture of a big Ferris wheel. So we're going to talk with statements of accomplishments, and we're going to take the readers of the Form 990 on a little bit of ride. So they're going to join the organization's mission as you describe the view of the organization from the top of this Ferris wheel, and then descend deeper into the annual accomplishments of the organization. So we often tell clients this is the organization's opportunity to brag about all the good work that is done throughout the year. There's also space to notify the IRS and other readers of the new services or significant changes. So we want to take this opportunity as a good marketing opportunity and an area where the organization confirms its current activities. This section should be a collaborative effort. So we want to make sure we join other team members, such as the development or program managers, to review or even draft these sections of the 990 so that the organization is always putting its best foot forward. To get into a little bit more detail of Part 3 here, there's 2 questions at the top. The IRS wants to know if the organization undertook any new program services during the year or if they stopped doing any significant services. So the IRS doesn't provide any specific guidance on whether something is new or what information should be included in the description. Therefore, you have a great deal of flexibility when answering this question. Remember, the Form 990 is also a public relations document and an opportunity to tell your story in a very public way. If you believe it is in your best interest to talk about a new program, regardless of the size, you should take the opportunity to do so here. And as I mentioned, there's a question about if the organization ceased making significant changes to how it conducts any program service. Again, little guidance from the IRS. Basically, the IRS is interested when your organization is no longer performing services it has done in the past. And then we really get into the meat of this section, which is your program service accomplishments. The IRS asks that you list the top 3 programs determined by expenditures. And remember, keep in mind, donated services and facilities are excluded when you're determining what your 3 top largest programs are. And the organization is required to briefly describe the program services and the accomplishments it achieved during the year. And we should be using specific measurements here, such as how many numbers of clients were served, the days of care provided, how many sessions or events were held. If exact figures aren't available, that's okay. You can use estimates, but you really want to make sure you're putting that detail in there and not giving generic explanations. I can't stress enough the importance of reviewing and updating and even rewriting these program descriptions on an annual basis. The reasons companies, foundations, individuals, they want to provide support to your organization is because they believe in the mission and they want to fund it for your future achievements. Your program accomplishments are the result of that support, so give these areas the energy and attention that you would give a prospective donor or grantor.
So, Jana, I think one of the questions that I always get asked by some clients that I have, though, is a lot of that information is really available on the annual report, and typically that's emailed, it's on their website. So what's the benefit of putting all that information in Form 990 as well?
So as we've talked about earlier in this session, the Form 990 is a public document. So it's out there on GuideStar, so maybe people that you're not aware of seeing or asking for it are able to access it. And you really want to make sure you're reaching out to all those funders or potential funders or to people who are interested in the organization and providing them with the best information available. Then we get into the checklist. So the first checklist we see is a checklist of required schedules. There are 38 yes/no questions on this checklist, with a yes answer and requiring a supplemental schedule to be completed. The supplemental schedules provide detailed information that enables the IRS to evaluate the likelihood of violations to these rules. So some things to look out for are lobbying. Are we doing it? Are we doing it? Are we making sure we're within those limits that we're allowed to be doing lobbying? Do we properly track the expenses to disclose them? Do we have foreign activity? Do we have any? Does it require any additional filings? Are we tracking our fundraising activities? A professional fundraiser, that definition is pretty broad. So if you have any doubt, you want to reach out to your 990 team and confirm. And I would also focus on the section that deals with transactions with interested persons. If we have those, they could be a red flag. We want to make sure that they're in fair market value and that the conflict of interest policy is being followed. So really, the organization, like all the parts of the 990, needs to review this annually and make sure that any changes from the previous years have been captured.
We've now come to our second polling question. Do you involve others in your organization outside of finance and accounting to help prepare the Form 990 each year? Answers are A, yes, or B, no. Please take a moment now to answer. While participants are submitting their answers, I'll provide the second CPE word. The second CPE word is mission. If you want to receive CPE credit, please jot this word down because you'll need it at the end of the webinar for the survey. Again, the second CPE word is mission, MISSION.
Okay, and the poll results are in, and it looks like a little over half is involving outside of the finance and accounting to help prepare the Form 990. So that's encouraging, but we'd really like to see that be a little bit higher. As we mentioned, this should be a collaborative effort, and you want to make sure you're pulling in those people who have that information, whether it be program directors, marketing directors, to kind of make sure the organization's putting it best foot forward. The next section we have starts to deal with the statements regarding other IRS filings. So this is another checklist, and it's of other IRS compliance that might be required by the organization. It's intended to alert organizations about potential other compliance requirements that are not necessarily related to the 990. Some of the questions are pretty basic. How many 1099s and W-2s were filed? Is the organization complying with those requirements? And then it also gets into if the organization has any unrelated business income during the year, and if the appropriate 990T was filed for that. And then more detailed questions about if the organization has an interest or signature authority in foreign bank accounts. Was that FinCEN completed? And another thing organizations should keep in mind is not only does the organization have a FinCEN filing requirement, but the individual may have a separate filing requirement with its own personal tax return. This checklist helps both the organization and the IRS with additional compliance outside of the 990. And then the last checklist that the Form 990 has deals with governance management and disclosure. So what happens when the carousel stops spinning? This section covers questions about the governing body and management, policies, and whether or how the organization promotes transparency and accountability to its donors. This section is very important to potential donors and watchdogs and the IRS. But while the IRS does not require any of these policies and procedures, they do consider them good governance, and therefore the organization should do its best to follow the guidelines established. So the first question on this section deals with independence. So really what you want to see for a nonprofit organization is that the board is independent. And there's 4 prongs to that test. So they want to make sure that the compensation received as an officer or organization of related organization. Did the member receive total compensation exceeding $10,000 during the tax year other than reasonable compensation for services provided as a board member? And did neither the member or any family member of the board involved with the transaction, whether directly or through maybe one of their organizations? And the last prong of that independence is if the member or family member had a transaction with a related organization of the organization. So to show good governance, really you want to make sure that your board is made up of independent board members. When focusing on the management section, the IRS and any potential readers will see if the organization has delegated its management duties, made any changes to its bylaws, and reported any family or business relationships with officers, directors, trustees, and key employees. There's also a question about diversion of assets. So you really want to keep in mind when you're completing this that this is a very transparent document and allows readers to see all those things that may be important.
And Jana, what specifically is meant by diversion of assets?
So if there was maybe a fraud during the year, and there's certain thresholds that may need to be disclosed, and that would definitely raise a red flag for the IRS to come in and maybe ask some additional questions, as well as those watchdogs that we talked about. And then the next section of this checklist talks about policies. So one of the questions I often get, and I know we spoke about it earlier, was, does the board really need to review this 990? So I always say, is it required? No, but it does make a lot of sense for those overseeing the organization to have an understanding of this very public document and everything that's disclosed on it. And they also may have a better understanding of some of the relationships that might not have been captured when the finance department was completing this form. The form then goes on to talk about additional policies that show good governance of an organization, such as whistleblower policies, conflict of interest, how compensation of those key executives are determined. There's a 3-pronged test that really needs to be disclosed on Schedule O. And anytime you answer yes on this section, there's a narrative on Schedule O that's required to kind of go into more detail of how those policies are accomplished. The last issue in this section I kind of want to point out is there's an area to disclose any states that might require a copy of the 990. So if the organization is conducting activities in multiple states, you want to make sure it's properly registered in those states and satisfying those filing requirements.
So I think one of the other key things just to kind of point out when it comes to checklists, when it comes to the policies for good governance and management, as Jana had so much emphasized here during her review of these, that on these pages and within the Form 990 itself, there are over 120 what we call trigger questions. The IRS has gone from a place where they're selecting organizations for an IRS exam or audit by just reviewing Form 990 to using data analytics. So as you review these, as you think through your policies, if you're answering a lot of these policies that Jana had mentioned, the conflict of interest, the whistleblower, really, if you're answering those no, start reviewing and talking that over with your practitioner and seeing if you can get a template, get this implemented, because again, you're at greater risk answering those no for an IRS exam and being pulled, because as Jana mentioned, good stewardship, good governance is really what the IRS is after and looking for when it comes to the organization overall.
The next section of the form has to deal with compensation. Now, another important part of the form, and it can be a little confusing for some of those fiscal year filers to make sure that they're reporting the appropriate compensation. I know we do get a lot of questions of which W-2 we should be using, and you should be using the W-2 that ends within the calendar year of the fiscal year. And on this list, on this section, we're going to list out all the board members, regardless if they've received compensation and the time they're devoting, the officers of the organization, which is defined by the IRS as anyone noted in your governing documents, the top financial official, and the top management official. So those are really the top financial officials, the person with ultimate decisions over the finances, can be your CFO typically or your treasurer, and the top management official is the person with the ultimate authority over the following the board duties, and that's typically the executive director. We're next going to list our key employees, anyone who made over $150,000 and has those duties similar of an officer. And then finally, our top 5 highest employees who received over $100,000 of reportable compensation. So you want to pay attention to this because you're putting people's compensation information out there. The IRS is looking at this. They think it's important to make sure that people aren't getting paid too much for the scope of the activities that they're performing. And you also want to keep in mind that you need to also report your compensation that's received from related organizations. And the last thing that we don't want to forget is former officers, directors, trustees, and chief employees also have to be reported if they received compensation during the year, but they did not serve during the year. So there are thresholds for that. And going back to the IRS's concern that many exempt organizations are providing excessive compensation benefits to officers, directors, and certain key employees. So the 990 may require extensive comp data on Part 7 and Schedule J. So does the compensation of those listed in Part 7 appear justifiable? And you want to go back and revisit the governance section that we talked about when we talked about that 3-prong test and making sure that you're following those guidelines that the IRS has set forward for you. And then talking about the compensation and benefits, it leads us to the Tax Cut and Job Act. So we know that came out at the end of 2017, I believe, and it added 2 new taxes that could potentially affect the tax-exempt organizations. So there's a new excise tax on certain compensation paid to highly paid executives. Covered employees who receive over $1 million in compensation the organization will now have to pay an annual 21% excise tax for that compensation amount over $1 million. And then the commuter benefit tax, which I believe is affecting the majority of the tax-exempt organizations out there. So you all heard about it by now, I'm sure. And it increases the organization's unrelated business taxable income for the amount of expense the organization incurred for certain fringe benefits. And that includes qualified transportation fringe benefits like your Metro passes, parking facilities, and on-premises athletic facilities. So I know this isn't new news to anyone, but I just wanted to put it out there again as something that continues to burden the exempt community.
And then we come to our conclusion, the finale, the final act of the curtain closes. And really, what I want to emphasize here with the conclusion, this is all related to the financial information of the organization. So as we go through the Form 990, all of the information that's gleaned, does it also make sense when looking at the financial transactions of the organization and the trends that are apparent on the Form 990 core form? A board that's actively engaged in the review of this Form 990 is a board that will eventually and effectively make better decisions. Why? Well, it gets everybody's ideas out there. It gets everybody's opinions out on the table. So as you talk through the Form 990, as your board reviews it, management, I urge you to kind of look at places where maybe there's a difference of opinion from the board. Maybe there's a different recollection of events that occurred during the year. Make sure those discussions are being taken care of and they're out there and they're in the open. So the financial information, the statement of revenue, is the very first piece of that financial information that the organization or that the IRS is looking for the organization to report. So some things from a board perspective that we could be thinking of here is there necessarily a reliance on a source of income? Do we have too much reliance on foundation grants that may dry up, especially as we look through this new corporate philanthropy and everything that's occurring with charitable deductions, maybe from an individual standpoint as well? Is there too much unrelated business income? I like to tell my clients that tax is not a dirty word for a tax-exempt organization. Sometimes some of the public charities that I have worked with have kind of stepped back and pulled away from opportunities because it could become unrelated business income. But in reality, it's okay for an organization to have other sources outside of that mission and really have unrelated business income that they pay tax on. But you still want to make sure that you're within the guidelines, because obviously the IRS says that cannot be your main source of income. Is your royalty and your mailing list income truly passive? If it's not, then maybe you do have another source of unrelated business income that you need to speak with your practitioners about. Sponsorships are an interesting topic, especially right now with organizations as we get into this current year. Many of you are being affected by the revenue recognition standards. If you do have sponsorships, the Form 990 has always tried to have a place where you bifurcate that revenue between what the contribution portion is and what the true exchange transaction portion is. Now that's coming into play with the audited financial statements as well, making sure that your organization has that policy. So now we're starting to kind of go hand in hand with the 990 and the financial statements and how it should be really trended out there and reported and presented. So making sure that those classifications are correct. When it comes to special fundraising events, are you really showcasing those special fundraising events in the proper manner? A lot of organizations that I work with, if we're showing income from a special fundraising event, I tell them I can almost guarantee that something's not being reported correctly. Maybe the contributions aren't being pulled out enough. Maybe the expenses aren't appropriately allocated to that fundraising event. Or perhaps it's not a fundraising event at all. And then sales of inventory, is there any kind of miscellaneous income that's down on that very bottom of this part of the form in the statement of revenue, paid line 11, that maybe needs to be reclassified back up through the top part of this form? So looking at all of these areas, making sure that you've reported things in their appropriate columns, B, C, or D, is really an arena that management and finance function should be looking at, but that the board should at least be a little educated on from an understanding standpoint. Then we get into the statement of functional expense. Again, as organizations have come through with all of these new accounting standards updates that have been issued, the new ASU 2016-14, which is related to the nonprofit presentation of its financial statements, now requires a statement of functional expense, whereas in the past, only those social and welfare organizations were required to present a statement of functional expense. Now it is required. So this actually, in my mind, is another piece where we're trying to kind of team up the 990 and the financial statements together. It may not agree in totality simply because there are reconciling items that might have to be reported on the Form 990 itself. Maybe there's a difference in how certain things are actually allocated between its programs and its functions, because that new ASU is very specific when it comes to the GAAP reporting under the generally accepted accounting principles. But some things to look at here: compensation and benefits. How much is really necessary for the organization to utilize and do its operations? Is there excessive compensation that's being consumed by the organization's revenue? Are all of the expenses justifiable? In particular, we really like to look at lines 11, 12, 17, 18, and 19. A lot of those surround consulting expenses. If it is completed, if you have contributions, and do you have fundraising expenses that are reported on the statement of functional expense? If you do have contributions reported on your statement of revenue, more often than not, we like to see fundraising expenses also reported, because somebody is out there doing some type of fundraising in order to get those contributions. And the age-old question that we tend to always get: what percentage of management in general and fundraising, which encompass our supporting services, is an appropriate percentage when we look at dollar value? So I know in the past a lot of emphasis has been put on this 25% number, but again, every organization is going to vary. They're even going to vary within themselves from year to year. There's been a lot of talk the past few years about the overhead myth, and while that conversation has been dwindling the past couple of years, I do still think it's an important topic to talk about, because supporting services to an organization are still core to the mission of the organization. There has to be infrastructure that's built out. So I have no magic number for you when it comes to the Form 990 and what percentage of supporting services should be reported, what percentage on the dollar should go to program services. It's really going to be up to the independent organizations. You as management, you as governance need to be the ones really looking at that closely and determining if it's appropriate or if it's not. And then the last piece of this financial information that's really reported is the balance sheet. A lot of this information may not seem too important to management or to the board and how it's reported, but really classification of some of these items is important. For instance, lines 1 and 2 ask for cash, and there's a breakout between savings and non-savings. So which of your cash accounts earn interest and which don't? That might be important to the board to look at. So making sure that's appropriately classified. Do you have any related party loans that might be diverting the resources from your program? Do you have any kind of an increase in accounts payable and accrued expenses that might suggest a potential cash flow or liquidity problem? Again, as I mentioned, that new standard that's really hitting all of you this year related to the nonprofit financial presentations. There's now a requirement to have a liquidity and availability footnote disclosure, which is giving greater transparency. So these are some of those things that you can kind of look at on top of, side by side, with your audited financial statements, and really see the comparison and get the transparency out there that a lot of these charity watchdogs and donors are looking for. Do you have any net assets that are restricted? And do you have enough to cover you from a financial transaction or financial asset for the current year to cover you for the next year? In other words, are you borrowing from the future for what your donors have given to you for a restricted purpose? So those are all the types of things that you can really look at and dive into when you look into the balance sheet on the Form 990. And last but not least of our financial information surrounds financial reporting. So we do have a reconciliation of net assets on the very top of this page. But then we talk about your audited financial statements. Are you on an accrual basis? Did you actually have an independent audit performed, or a compilation or a review? Did each member on your board receive a copy of those audited financial statements, the auditor's report, any kind of internal control communications that might have had, your management letter? The reason why that's so important is if a lot of organizations that I work with, sometimes what might happen is you have a separate finance committee And then you have a separate audit committee. And sometimes the finance committee may not actually get the audited financial statements when they're reviewing the Form 990, but the audit committee has, and then the audit committee is not looking at the Form 990 in conjunction with the financial statements themselves. So making sure that you have the oversight, you can compare them side by side, again, as those questions pop up. If you are audited, does each member of that group have the proper oversight for the financial reporting process? So that is key in understanding that question.
And with that, we have come to our third and final polling question. Does the organization send reasonable effort questionnaires to board members in order to establish director independence? Answers are A, yes, B, no. Please take a moment now to answer. While participants are submitting their answers, I'll provide the third and final CPE word. The final CPE word is status. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the final CPE word is status. S-T-A-T-U-S.
Okay, and the results are in, and it looks like about 58% of you send reasonable effort questionnaires to the board to establish their independence. And again, a little bit more than half, but we'd really like to see that increase. And if you have any questions about what those questionnaires should be, feel free to reach out to us and we can send you a few samples. And the next and last part that we're going to address, I think, during this seminar is the appendices. So we pointed out a few of those schedules that we talked about with the original checklist of required schedules. Remember, yes answers normally required you to complete an additional schedule. And we're going to provide a little bit more information to the IRS in detail about what those activities are that you're conducting. So the first schedule that we have on our list is Schedule A. And Schedule A is the organization's public support test. So those public charities need to complete that public support test. And, you know, I could spend all day talking about the public support test, so I'm going to try to keep it limited and just kind of give you a very high overview of it. So the first thing you want to think about is if your organization is properly classified. So as a public charity, sometimes you start these organizations and you think, oh, we're going to be maybe a contribution-based organization and we're going to rely on contributions to kind of keep us going and build our base. And as the organization morphs, maybe it turns into more of a program service revenue kind of type of organization. So when you're looking at how your revenue is derived, you want to look at your public support test and make sure you're properly classified there and making the right choice. And then, you know, the public support test has a 33 1/3 threshold, so you want to make sure that the organization isn't in danger of becoming a private foundation falling below that 33 1/3 threshold. And, you know, are we properly tracking those excess contributors or those disqualified persons that are required for this test? As I mentioned, it's a rolling 5-year test, so it is over a 5-year period. A lot of times clients call me and say, this doesn't look right. These people didn't give us that amount, and we have to explain, yeah, it's a 5-year test, so we're looking at those donors over that period to make sure that they're not causing you to fall into that private foundation status. The other schedule that we thought we'd talk about a little bit today is Schedule C, which deals with political campaign and lobbying activities. I hope if you're a C3, you're not doing any political campaigning. For those other organizations, the lobbying threshold, did you apply for the 501H election, which kind of sets a defined limit on how much you're allowed to lobby? If you didn't, are you spending a minimal, not a significant amount of your expenditures on lobbying activities? The IRS hasn't told us what that threshold is, but I would say, you know, anything below 5% of your expenditures is okay. And if you're a membership organization and you're collecting dues and you're doing lobbying, are you informing those members of how much of those dues are disallowed for lobbying purposes? Are you tracking how much of those dues every year you've been telling are disallowed versus your actual lobbying costs and updating it on an annual basis? So those are important sections that the organization should really keep in mind when they're completing these schedules. We also have Schedule D. And I think that a really important part of Schedule D is that reconciliation at the back. It's almost the last section of the Schedule D where we reconcile from the financial statements to the Form 990. We touched on briefly that there are certain reconciling items. So a lot of times donated services, you know, that if an organization has those, that's not included for 990 reporting purposes. So it becomes a reconciling item on both the revenue and expense side. If there's investment fees where those are booked, if they're netted against revenue, they become a reconciling item for 990 purposes. Does the board understand the nature and obligations of its endowment funds? We do disclose on the 990 the endowment fund detail, you know, the activity during the year and its breakout between temporary restricted and permanent restricted. And are those board designated funds endowment funds or not? So that can be tricky. Are they limited for a time or purpose, a specific time or purpose? So that's something you'd want to review. We also talk about Schedule F, which is where you report your foreign activity. Schedule F, you're going to report any programs, grants, investments, and you also need to disclose if the organization had over $10,000 of revenue. I feel like that's kind of a hidden question on the 990 and often gets overlooked. And then there's also a section on Part 4 of Schedule F, which asks you a list of questions, and sometimes the yes answer may require an additional foreign form to be filed. Those forms are required. There are significant penalties if you don't file them. So you really want to pay attention to those and make sure that all the relevant forms have been filed with the IRS. And finally, Schedule J. I know when we went over compensation very briefly, we said the IRS was very interested in compensation, how it's determined. Schedule J does go over the compensation benefits. Were the benefits warranted? Is any of it taxable compensation? It again asks how you determine that compensation of the top executive officials. Well, there's a few specific questions that they want to know. You got to check the boxes. Did you use comparable data? Was it reviewed by independent persons? And if any of the individuals allowed a related organization to set the compensation, you have to describe that process in Part 3. It also asks you to break out bonus details for individuals. So all of those that are listed on Part 7. So Schedule J also provides quite a bit of compensation information for your top executives and your highly compensated employees. So it's something you want to pay close attention to.
So I think, as you've heard us speak today, the Form 990 really has a lot of detailed information available out to the public. So your organization really should be doing its due diligence in order to understanding what the forms and checklists, the policies are really looking for. So one of the big things that I always tell the organizations that I'm working with is do not hesitate to reach out with any questions that you have. Form 990 uses a lot of IRS or legalese speak sometimes, so not everybody may understand what the question might actually be asking. So again, if you don't understand something, chances are somebody else in the room won't either. So as board members, speak up. Don't be embarrassed to admit that you might not have that finance background. Again, as I mentioned, your community leaders, your creative thinkers, your fundraisers, those of you that are in finance, your accounting transaction people, you might not be those tax people. So don't hesitate to reach out and ask any questions of us and of your practitioner. If the explanation isn't understandable, it's okay.
Now, before we wrap up today, we'd like to take an opportunity to answer a few of the questions submitted by our online participants, as well as any others from the room. So the first question we see submitted online is, when would a nonprofit be required to file an 1120 POL?
Okay, so if an organization, a nonprofit has political expenditures and it also has investment income over $100, it may be required to file an 1120 POL to report, that political activity and then be subject to a tax.
Next question we have is, if we have multiple companies and an employee's salary is allocated across those companies, do we put just a prorated share of the high five salaries, or do we report their full salary?
So there's two separate parts of the Form 990 where this compensation is going to be disclosed. On Part 7, you're going to follow what the face of the form says and report whoever's issuing that W-2. You're going to report the hire of Box 5 or Box 1, and then estimate, the benefits that were provided by the organization. And then maybe on Part 9, if it's an officer director, trustee, or key employee, and their compensation has to be disclosed on line 5, then you're going to break that out on a pro rata basis based on, which organization we're filing.
Right. The next question is proceed. What is meant by the 3-pronged rebuttable presumption?
So the 3-pronged rebuttable presumption has to do with the narrative of how compensation is determined for your CEO/executive director, that top management official, and some of your other officers and key employees. So there are 2 separate questions on Part 6, line 15A and 15B, to which this relates. And a lot of times as I work with organizations, the Schedule O disclosure surrounding the 3-pronged rebuttable presumption and how we answer this question is really what I feel like should be geared to really giving that detailed information. So you might be meeting that 3-pronged rebuttable presumption, answering that question yes appropriately, but your Schedule O disclosure may not give that detail that really warrants that you said yes appropriately. So let's talk about what those 3 prongs are then. The first one is that you have to have an independent review by the authorized body. So as Gianna mentioned, typically this is your board. And are they independent? Making sure that they are independent if they're reviewing your CEO compensation. The second piece has to do with comparability data. Are you getting an independent consultant to come in and do a study for you on the compensation? Are you utilizing other Form 990s for organizations? Are you going out and soliciting surveys with organizations that are maybe in your geographic region? But what are you actually doing to compare that salary base to other organizations who are similar in size and similar in geographic region? And the third one, which I think is the big trip up for a lot of organizations, is it contemporaneously documented? The reason why I say this is the big piece that a lot of organizations actually don't meet is because a lot of times the CEO compensation is determined in an executive session. And an executive session typically doesn't have minutes. But in order to meet the 3-pronged rebuttable presumption, it has to be documented. You have to state who was there, who was the decision maker, whether there were yays and nays, what kind of comparability study was actually performed, and then what the ultimate decision was. All of that should be clearly documented somewhere, some way. So those are all the requirements for the 3-pronged rebuttable presumption in order to answer that question 15A for your CEO. 15B on Part 6 relates to your other officers or key employees. And again, same kind of information applies to answer that question, yes. So in looking in that detail. One of the things that I like to point out here is that I do have some organizations who meet this, but then I always get the question, well, do I have to do this every year? An independent study costs a lot in order for us to get a consultant to come in here. And really, I know that Gianna and I are both on the same page here. We feel that every 2 to 3 years is more than sufficient, especially if all that you're doing is just doing a cost of living increase each subsequent year, or if you have a contract that has been outlined with your CEO or an employment agreement. So really, we feel that you can answer this question, yes, you may not have done it in 2017 or in 2018, maybe you performed it in 2016. State that in your Schedule O narrative and say, this was last performed in 2016. That way, everyone at least knows that you're doing your due diligence when it is coming up. Sometimes even if it's done after the year end for which we're reporting the Form 990. So if you're a December 31, 2018 year end, and in March of 2019 you happen to do another independent study for that comparability data, we would also state that on Form 990 that you've done that in March 2019, just as a going forward. Again, getting that detailed narrative in there is really important. Great question.
Looks like we have time for about one more question. How can we better utilize the resources available to us for Form 990 preparation and data gathering?
So I would say, there's a lot of checklists out there. You should probably receive a checklist from your, if you have a tax preparer or an outside person who's preparing that form for you. You should review it and look at the form itself and maybe, reach out to your tax preparer and ask those questions of anything you're unsure of. I know I get a lot of questions about which W-2 to use, what kind of compensation needs to be disclosed, narrative on the details, and, go back to your conflict of interest policies, go back to those written documents, review them, and pull the language out that you think is appropriate and should be reported, and that you want the public to know of how all of the policies you have in place.
And I think some of the other resources that are obviously available to you are just people within your organization, your board being one of them. But Jana had mentioned that especially when you utilize and are developing those narratives for your mission and service accomplishments for the year, really those program managers or development team, getting them all ingrained into that 990 and helping to develop those narratives is definitely key. Getting your CEO to review some of those disclosures is also a great resource and tool to use. So maybe thinking a little bit outside of the box. Using your annual report. That's also another key item to utilize. And then I also always like to tell everybody, go back to your bylaws, go back to those, because that tells you who your mission is, how your organization is governed, and what those policies and key indicators are. Those are all great tools that are right in your back pocket that you can just pull from and tap into at any time.
Looks like we have time for one more last question. Is there a deadline for adopting a policy for Form 990 reporting purposes?
Yes, you need to have that policy in place before the end of the tax year. If you don't, it's okay. I mean, we might not be able to answer yes on Part 6 where we talk about those governance questions, but we can always disclose in Schedule O that policy has been implemented after year end, and then be able to check those boxes yes going forward.
And it looks like that's all the time we have for questions. If you have any additional questions after today's program, please don't hesitate to reach out to any of us. The contact information is as it appears on the screen. And with that, we would like to thank everyone for attending today's webinar. We encourage you to follow us on social media at GRFCPAs and visit our website at www.grfcpas.com for upcoming events and alerts. Please remember to complete the email survey that follows if you would like to earn CPE credit for attending today's webinar. Thank you again for attending and have a great day.